Hey, Susan, it's Celeste. Can you put me through to Catherine? Because I'm just starting to go live, right? Hey, Kath, I was calling the office. Okay, so yeah, I had called Susan to let her know there was a bit of a delay. It's going to start in 10 minutes, but I turned on the live broadcast. Can you see it? Yeah, you should be able to see me. I'm going to walk. Well, right, because now you have the shared screen, right? So this presentation will go bigger, and you'll hear my voice. Hear my voice? Right, because I'm going to stop the share, okay? And now you're going to be able to see me full force, right? You see me? I won't. I know, but see, now you can see the whole screen. When he brings in his presentation, you'll see the share screen. So you'll see me tiny, and then his presentation will be on there. They're going to start in 10 minutes, so I thought I'd start it. Yeah. Yeah, you can choose that, or then you'll see, once I share my screen, the presentation will be bigger and the speaker will be smaller. Okay, all right, hon? Okay, thank you. All right, bye. Okay, perfect. They're almost here. I just had to get everyone on live broadcast. This is a great, it's going to be a great session, okay? They're going to introduce themselves, okay? FBC, you've never heard of them? Okay. So what they do is, it's a group of tax specialists, okay? All you do, like you know how now you have an accountant, right? They're coming up. You have an accountant, you have to go there and kind of split, this is what I paid for kids, this is what I paid for gas. With them, you don't do that. You give them your bank statements, right? You print them out. They actually start sorting out what you should and what you shouldn't. And they'll do it mobile. So let's say you're out of this office, they're in Barrie, you book an appointment, they come here 2 hours, your taxes are done. And they're actually cheaper than any other accountant, because it's a group of knowledgeable and past people that used to work for CRA. Come on in. Hi, how are you?
Good, how are you doing?
Good, good. We have a lot of people on live broadcast too. So come on in. Hi, Celeste.
Nice to meet you.
Okay, we just spoke on the phone.
Yep.
All right. Okay. So we have 10 people in class.
Okay.
15 locations currently on live broadcast.
Okay.
Do you have a presentation? Laptops can't be plugged in. You have it on a USB? Yep. Okay, perfect. How was the drop summer?
We're still waiting.
Yeah. Well, you can, if you don't mind, just
Our team's like 2 minutes late, so we just don't finish the presentation on something.
all right.
I don't know.
Whenever you.
Because we were ready for a moment. Yeah. Yeah.
And you have a clicker?
Yes, I have the clicker, I have everything. This is all remote. So what we'll do is share our screen. Right? That's here. Okay. So I'll show you. I'm going to plug in the USB.
Okay, there's a number of things on there, so I gotta think about it.
Yeah, absolutely. It's all remote. And then you'll see this is your mouse. It's remote, so you can actually pick whatever you want. And this is your clicker. Perfect. So our main computer is actually in the closet, but all the other things are remote. And then me and you will touch base, because by the end of, I would say by the end of first week of May, I need to do my taxes. Okay, and I had set that for the conversation we had, but I'll combine mine as well, my husband's, right? But I'm the one that has dual, like individual and business.
Yeah.
And he's just individual.
Okay. Yeah,
Okay.
we'll, you'll be talking about Glenn at, time.
Yes. Okay. All right. So I would, like, or I can come up and we can meet, like, even, I live here, mind you, but I work so range. Right? And I do a lot, but I always organize, so I do like my gas. So,
Yeah.
I'm very organized.
And that's for each that you need to get that.
Really, as realtors, we have until the end of June, right? Right. But not now. Not anymore. Not yet, right, not yet, help me, please. But by the end of May, I usually get them like, I don't know, my husband is an individual shooter than my end of April, but he also says, and it's not big a penalty. If I'm wrong, yes, or something like that. I don't think you guys are the specialists, but technically and ideally, yes, that's what it is.
Washroom?
So just round the corner.
Okay, perfect. Hopefully by then they'll be here.
Yes. Where's the other gym? Yeah, started shortly. All right, you're Pauline, right?
No, Francis.
Francis, there you go.
Yeah.
And Catherine's P. Neda.
There is another lady, she went to the.
Oh, yeah, with that guy.
Yeah.
They
I think
work
she
here?
thought it will start at 11.
Okay, let me, okay. Hey, Ben, how are you? It's starting in. We were waiting you to make yourself. It's actually gonna start now. Yeah. Okay, so what I usually ask themselves because I
If you guys want it, but usually this room's full, so.
yeah, but now we have it live web broadcasting.
Yeah.
Because anytime you know yourself that whether so right now you're online, you have each office is now equipped with a TV that watches, right? So we do it in that sense, but definitely what happens is once we get through the course, we have a lot of inquiries coming saying we have their contact, and that's when I forward them to you. And it's been like that for like over a year now since actually when I started it was a regular. So something right, Michelle, they're teching that sense.
Yeah, perfect.
All right. So we'll just wait a bit. I have a few more sitting in and then
And I. Yep. Oh, okay. And they can when you are. Yeah, and then stay there. So. What are you saying over there?
It sound like rocks.
I stay pretty calm. Just chill.
Yeah.
Do what you gotta do. I say we get started. There's 2 more parking, but let's just, if you
Okay.
can't find parking, I say we get started because we have live waiting for us as well.
Yeah, well, we
Okay.
parked across the street, it was so much easier.
I know. You know,
We do that every time, so.
all realtors like it right underground, right? So,
Too much construction on the side of the road.
yeah, it's all over though. Like Young is all closed.
Yeah.
So sorry, can you just give me 1 moment, please? Sorry. Just, can I call you back there in 5 minutes? I'm gonna come back maybe 5 minutes. Okay.
Okay, so I guess we'll get started. Welcome. Thanks for having us come in. I'm Richard Nelson,
I'm Derek Fairbairn.
and the gentleman over here is Glenn. And we're the team in this area that deals with taxes. We are real estate professionals as far as when it comes to tax. So we come in, we give some tax tips, a little bit about our company, and then answer some basic questions. So I know there's lots of people watching, so we'll get right into it. So a little bit about FBC. First off, FBC stands for Farm Business Consultants. Back in '52 when we started with farmers. So a couple of years after that, about 5 years after that, we started working with small business entrepreneurs like yourself. And so we've been doing it for quite a while. We're in our 67th year working with entrepreneurs and farmers. So we're a national company. We're right across Canada. We've got quite a few clients. But the reason for that is you look at accounting very differently than a regular accounting firm. Okay, so we're very proactive. We're the only firm in Canada that is based by membership. So we'll get into reasons as to that a little bit later. We've got a technology that optimizes our tax returns, so it utilizes all of tax law. We've got proprietary software that allows us to really get every penny back for you, so you're paying the absolute minimum to the CRA. There's a lot of advantage to that, obviously. We come to you. So we come to your home office, we come to the brokerage or another office if you're in a remote location. But we want to come to your tax documents. We don't want you to come to us with your tax documents for a number of reasons. One of them is security. We want to make sure that all of your stuff stays in one place, for privacy as well. And also because we're service-based and we want to really service you. Quite a few of us, over 300 highly trained and motivated reps to be able to be out there working with you. A little over 50,000 clients. So not too bad of a company. Last year we saved over 27 million in taxes for our clients. So we do quite well. We have a guarantee. So when we actually do your tax return, if we make any mistakes, we even pay the fines and penalties for it, which is substantial. Usually when you go to a regular accountant, the first page that you see, there's a liability release form. So it's based on the information you provided. It's usually the first paragraph on the first line. That releases them. So very literally, you could give them 5 numbers. They could enter them wrong and it's still your fault. Now, I'm not saying that they'll enter them wrong, but if they do, the CRA comes after you, not them. We don't have that. So we actually are liable. We want to make sure we do it right. We also offer full audit protection. So if you get audited, or rather when you get audited, being in the industry that you're in, we handle the audits for you. You don't pay us an extra dime. We do everything. And if it goes to the point where we have to take the CRA to court, sometimes that happens, not very often.
Yeah, we got a couple going on right now. So.
We handle that as well. So court costs, legal fees, everything associated with that is all covered by your membership. So we'll jump right into tax tips because that's why you're here, not to hear all about us. So what we've done is we've put together some of the biggest tax tips or issues, would be a rather better way to say it, that we see in your industry. So we just want to address some of them. Filing a tax return on time. As small business owners, does anybody know when your tax returns actually due? June 15th is when it has to be filed by, okay? But the problem is, or the nice little catch the government put in, is if you actually owe any money, which typically you guys do, it starts accruing interest as of April 30th. Now, if you don't have to file to June 15th, but it accrues interest as of April 30th, what would be our recommendation? File before April 30th, or at least pay into the account.
Show that it's there.
To show that it's there, so that you're not accruing interest. Because interest is one of those evils that we just don't need to pay. You typically have to in some aspects, but try to eliminate the most, because that's literally throwing money out the window.
Because you don't even get to write it off if you pay it, so.
Yeah, fines and penalties are not deductible. You wouldn't believe how many times we get asked that. How many people mileage log? Not so many in this room. Okay, so minimum standards were initiated by CRA a couple years ago now. And what's been put in tax law is minimum standards on your mileage. So they have the option to eliminate all of your vehicle expenses if you're not tracking your mileage properly. So you have to track your trips. Now, what's minimum standards? So the date, address A, address B, and the distance in between. Without that, you do not have mileage. So if you're claiming it, they audit you and you can't prove properly your mileage log, they can eliminate your car payments, your insurance, your maintenance, and your gas. And now you owe taxes on everything. And now they found a mistake, they can go back a number of years and do that. Continue to do that. And that adds up. So our recommendation is you do get some kind of app on your phone. The one we recommend is called Mile Catcher. It's a free app you download. It's a GPS system. So if you've got multiple vehicles, you put them into your garage. It'll ask you when you leave. When you leave the home, it'll ask you which car you're in. You let it know, and then it tracks you by GPS. So it knows the address you left from and the address that you arrive at. If you park there for a little while, it'll pop up and say, was this business or personal? Swipe left or right. It gets a little fancier if you want the premium, but it's not needed. But at the end of the month, it then spits out an Excel spreadsheet and gives us everything we need to be able to track the mileage properly. That also gives you the advantage of utilizing all of your mileage for business, not just a percentage that accountants like to stick to.
Yeah, the problem with it is a lot of accountants stick to a percentage, thinking it'll keep you under a red flag, won't get you audited. Okay. The other thing is, if it is in turn that your vehicle is used over 90% for work, you actually get to claim 100% of your expenses. So I have ones that have been using the log now, and they were normally doing 40, 50. They're now doing 80+% that they're actually able to claim, and they have the logs to cover it up. So.
Now that can be a big difference in deductibles. It also gets you more into being able to maximize. Now, currently it's 55 cents a kilometer, I believe.
Yeah.
So just my example, I go to the auction and I buy Ford Escapes. They're cheap, but they're 4-wheel drive, they're comfortable. Buy them at the auction. They need a little bit of work on them, but it's 100% for FBC. Now, I'm a farmer and I've got a couple other corporations. But FBC is specifically for this vehicle. Now that's a considerable deduction for me, because I get to claim everything specifically for my business. So if you've got one vehicle, you guys, every trip you do, you're doing something with business. You need to track that properly. You need to utilize and maximize that because it's huge. Okay. So business and personal finances. Do you want to cover this one?
So this one is.
It's a fun one.
It can be. So one is the straight one is your bank account. Do you have a separate one for your business to go into, or is it all going into personal? The issue that you have there is if you ever go under audit or review or even a net worth audit, they're going to want you to have every indication of what goes through your bank as to what it is. Okay? Because they want to know everything that's a deposit, they're going to say is income unless you can otherwise. Right? So also the other reason why you want to separate them is if you have one for all business, you get to write off your bank account any transactions 100%. Whether it's a service charge, an NSF charge, e-transfer charge, you then get to write that off 100%. If it's running through your personal and say you do claim 100% of it, the government can come back and say, well, unless you can show us what is the split, you can't claim it. This also goes for credit cards as well. So credit cards, you can claim the interest, you can claim fees on them. Line of credit if you're using it for the business. But if you're running personal through there, they're going to come back and say, well, if you can't break down what is personal and what is business, you don't get any claim. So it's always better to be able to separate the two on.
Now, when you're talking bank account, $14.95 a month or whatever, doesn't sound like a lot. First off, every penny counts when you're accounting, right? But the other thing, we're also talking about credit cards and credit lines. We know you guys live on credit lines quite often. So you need to separate that. Because if you run any kind of a balance, that interest adds up. If it's tax deductible, well, much better, right? Because you can go after that money. Whereas if you're mixing in your personal, you can't. They'll fight you on it. So you want to make sure you're separating those two. So mortgage income interest tax deductible follows along the same line. You're in a position, if you own your home, you've got equity in the home. One of the ideas is you can take out a second mortgage or a HELOC, like a line of credit on the home, and you can invest that into business. Whether if you're purchasing another investment property, some people buy stocks, I wouldn't suggest that, but it's still a business. Any kind of business expense that you use that money for, again, tax deductible on the interest. So that second mortgage that you took out, all the interest is tax deductible because it's a business expense. So now you can utilize the assets that you have, the equity that you have that's just sitting there, right? Make it work for you. Gifts. People like this one. Do you want to cover it?
Sure. So gifts to clients, you got to watch for what the government will come back and deem as either entertainment or meal. If it's a gift card to the keg, they're going to say, well, it's a meal. You get a 50% deduction. If it's cards to go to the movies, if it's go to Wonderland, anything like that, Tim Hortons, it's going to say it's a 50% deduction. Okay?
Anything attached to food.
Yep. Food or entertainment. Now, if you want to turn around and give them a prepaid card, MasterCard, Visa, 100% written off. Why? Because they then get to choose what they use it for. If you want to give them a card, say to Home Depot or Rona, well, that's not entertainment unless they're going to have fun renovating their house. So that one is 100% deductible as well, right? So it's choosing the ways where you're going to get the most benefit as well.
So a lot of people say, well, I'd like to buy, new clients a bottle of champagne, or to welcome them into their home, or an LCBO card, or gift card to the keg, something nice that they can go out and treat themselves. Buy a prepaid. A little bit of a twist in how you're doing it, but now it's a huge deduction for you. Or more as a gift, to thank clients, because you're after those referrals as well. You want additional business. You want their business in the future, so you want them to remember you, right? But stick to non-food. Yep.
If you take your client out for dinner and you get a bill like $300 at the end, you and another client, 2 people.
Yeah.
So how do you do the deductions?
Government says it's 50%.
Yeah.
On the top, including you, as you consider as a.
Yeah, even if you've got 10 clients on the other side of the table, it's still a 50% deductible.
Because it's for a meal.
Okay, so you do have to be cognizant
The only
of
way
how
you
you're
can do
claiming
it,
that.
the only way you can get around that part would be if you broke it down and had each meal separate. At least then you get to claim 50% of each meal.
So separate bills.
Yes.
Yeah, the waitress is gonna love you.
Just think of the tip she's going to get on that, right?
Yeah, well,
So.
I think it's still the same value though, isn't it?
Well, I'm doing that much more work. You might want to get a little bit more.
Okay, you can cover this one.
So renting out a portion of your home, this also falls into workspace and residence that I also talk about as well. You want to make sure if you are renting out a portion of your home that you're not depreciating any of the building. Okay, so that means if you put a new roof on, if you put new siding on, windows, you do not want to depreciate any of that if you have someone renting out of your house, because then that house becomes a business. So now you lose that principal residence deduction. Okay, same thing goes for the workspace and residence. I don't know if you're paying for offices here or not, but if you're claiming workspace at home, you get to choose one or the other, which one is the most benefit. For that resident at home, you don't want to depreciate the building because again, you're now losing out on whatever percent. So if you claim an office of 20% at home, now you depreciate a new roof at 20% because you need a roof for the office. Well, when you sell the house, you now are going to have capital gains on 20% of what you sell it for. And the government does see this on your returns when you're putting them all in. Now, if you want to depreciate an appliance, yeah, go for it. It's not a part of the house. Dishwasher, dryer, like different things that you might have. But anything that is main house and whole, you want to make sure you don't depreciate or else they change it to a business status.
So this includes like a basement apartment.
Yep.
If you're renting out the basement. Now you can rent out the basement and it doesn't change your capital gains.
That's right.
It doesn't initiate that. It's as soon as you start depreciating or claiming those CCAs.
Mhm.
So you can,
Mhm.
we're not saying you can't, you
Yeah.
can, but be aware the short-term discount or deduction on your taxes currently
Mhm.
is going to cost you more in the future because you will get capital gains against your own residence. So, you know, short-term, long-term pain, try not to do that, okay? So a donation that does not result in a charitable, so a lot of people will, at the end of the year, they've made huge amounts of money, right? And they're looking for deductions. You're looking to put your money somewhere, or you're gonna pay it in taxes. So charitable is one way. Be cognizant though, charitable under $200 is a 19% deductible. Over $200 to unlimited, it's only 29%. So if you donate $10,000, you can only deduct $2,900 of your income. Now, that's because it's charitable. So look at not-for-profits. Look at other avenues. So there's 59,000, over 59,000 not-for-profits in Ontario alone. Now they give out a general business receipt. Now, if you can utilize that as promotional, you can deduct that as 100%. So that 10,000 is now worth 10,000 to you. That's a big difference. So I'm not saying don't donate to the Cancer Society if that's what you feel that you need to do, or to your churches. But if you're getting a charitable receipt, just kind of limit. Do what you need to feel good about what you're doing with them. But look for not-for-profits. Examples. I actually, I used to be in the horse industry, in the racing industry. So I look for horse rescues, animal shelters, stuff along those lines. You sponsor an event, and then all of a sudden you can get all your deductions back, right? So look for stuff like that. Hockey teams, you can sponsor a hockey team, get your name on their jersey. That becomes, you know, fully deductible. Look at sporting events. If you can sponsor some kind of charitable or not-for-profit event, then you can deduct that as well as promotional. So you're looking for, how do I promote myself and stay away from that charitable receipt? Because that charitable receipt, no matter what you're doing, locks you down at that 29%. So you want to think outside of that. Does that make sense? So this is still coming. The government's still trying to initiate the ability for you guys individually to incorporate your business as a real estate agent, not as a broker. Now there's pros and cons, obviously. So with all of our clients, we will be sitting down individually with them and going through those pros and cons and making sure it makes sense, because it won't make sense for everybody to incorporate if you can. But one of the examples or one of the suggestions we suggest is understand the difference between dividends and salary. We typically will suggest a mixture of, so that you still have RSP room, because in dividends you don't have any RSP room. It doesn't increase your contribution at that point. But you want to weigh that out with the tax benefit of the dividends. Okay? Any questions on that? Pretty straightforward stuff, right? So we're getting into paperwork. So this is one of the reasons the government has targeted you guys in audits. Because again, minimum standards on paperwork. They can do a current year audit on you. So in June, they can say, we want your first quarter paperwork, all your bookkeeping. And you're not given a lot of time to do it. So you need to be up to date, okay? So it can be simple things. I know everything that I buy, you know, they ask you, do you want it, you know, in the bag, the receipt? Take it in your hand, put it in your pocket with your keys. Or, you know, if you've got a purse, don't put it, or put it in the purse. Keep it in your hand so that when you jump in your car, it's with your keys and you have like a little accordion file in the door. Ideal. Just put it in the month. It takes 2 seconds and you've at least structured or organized. So if you need to get into that month quick, it's just a quick grab and you've got all your receipts for the month. Okay? Just a simple thing. I joke about that with the purse because my wife's got a number of purses and she'll not use one for a little while. And she's like, oh, look what I found. Receipts from like 3 years ago, 5 years ago. Do you need this, honey? And I'm like, no. So black hole of a purse sucks things in. You guys know this. So try to keep it in a accordion file or structured a little bit better so that you can actually find the receipts when you need them. But it does save time. You can identify sales trends if you're tracking your books properly. All of our clients, it's free software that we set up and train you on. And you're actually able to track, you know, what you're doing. Does it relate into better money or worse? Are you making more profit by doing something specific? You can actually track that if you're keeping your books done properly. Securing capital. So if you need a loan, if you're buying an investment property, they're going to want to know your financials. They're going to want to know what's happening with your business. And if you can't explain that, chances are you're not going to get that loan. Lower your operating costs. So
with this one, it could be different places that you might be using for advertising, marketing, and that. You can actually look to see, well, what am I actually getting from that area? Am I just putting money in there and not getting much out of it? So you can actually turn the trend around on that fact.
Or rein in the wife.
Or husband.
Yeah.
Husband.
Again, my personal stuff. I've got 2 border collies, and I'm a farmer. And we got to the end of the year, and I'm doing my wife's bookkeeping because she does it all at the end of the year, even though I argued with her enough. But I added up the expenses on just the dog food. What was that, 19,000
Yeah.
for the year?
Yeah.
Just for dog food. So not tracking it, it gets all wild.
Yeah.
So we've initiated now a system where it's, you know, we're getting better structured on what we're buying and how we're buying it and when. So by understanding what you're spending and where and how, you can look for where you're losing money. Like dog food.
Yeah.
Organic, raw, oh my God, it's so expensive. So getting also a clear picture of your business, your financial health. So, you know, you could be making $1 million, but if you're spending $1 million, you're no better. You have to be able to actually understand where the money's coming in. And this is where your P&L comes in, your profit and loss. Understanding, you know, yes, I've got big checks coming in, but no big checks going out. You're actually able to get a positive or make a profit, and then you can start investing and looking at your future. You know, building it so that you can retire a lot early and enjoy your life. If you're making tons of money but you're spending it all, you're not going to have much of a future. You're going to be like, oh my God, where'd all my money go? I just have all kinds of bills. So living on credit, not a good thing. Being able to pay your bills constantly, keeping up to date. But you only know that where your actual health is if you track your books properly. Okay? And prepared for an audit. As I said, you can be audited for current year. So you do want to be up to date as best you can. The shoebox doesn't work. At least keep it in an organized fashion. The software that we initiate with our clients, we set it up to automatically pull up deductions. You just have to verify what it is. So it's a lot easier. It takes me about 10 minutes a week to do my bookkeeping. That's one glass of wine. Like, it's not hard. You leave it to the end of the year, and it's like, oh my god. If you're doing it constantly, it's just little bites, right? So getting into more of the audits, about a third of all businesses have been audited in the last 3 years. Now there's targets, and we're going to get into that, and you guys are one of the targets. Now this is 2016 number. So $100 million the government invested into auditors.
I think they doubled or tripled that for this year.
Yeah, for 17, it was 200 million. But look at the number, $8.3 billion due to that money spent on auditors. Now, I have no idea what it was in 2017. I know they spent $200 million on auditors, but they did give us an example of what they're actually auditing or how they're catching people now. They're going through your Facebook, your social media. So, there's still an advantage, provincial advantage to claiming single when you're common law. But if you're got pictures in Facebook, you guys on the beach, you're in an audit. So they are looking more deep. They're not looking for the blatant scammers. They're just looking for people that just don't understand what they're doing, because that's an easier target, right?
The other issue with the 8 billion is the fact that the books weren't accurate or weren't up to date. So when called on, they didn't have what they needed, even though they had the expense. They had no proof. Your bank statements don't count. Your credit card statements don't count. You actually have to have the receipts. So if that's all you have is those statements, the only time they accept those is if there's a fire or a catastrophe or something like that has happened. So other than that, you have to have the receipts.
Yeah, and it's not like the legal system. So the CRA is right. You're wrong unless you prove otherwise. Your records prove otherwise. So it's not like the legal system where you're innocent and proven guilty. It's the opposite with the CRA. Imagine that. So audit tips, complying with rules and regulations, obviously, and also knowing how the CRA selects it. You can avoid being selected as much as possible. So computer-generated lists. So all of these little forms that you fill out about your business and the businesses in general, they take all that information and they compile it. And they figure out, based on that, who they need to be targeting. So computer-generated lists, they do spit out industries and people in those industries to target. Audit projects. You guys are an audit project. So as farmers, because as an industry, a lot of you make common mistakes. So they know to look for those directly. So it's a quicker audit. They make more money that way.
Yeah, the other reason why reviews and that are being done more so on agents and that is because of that incorporation rule that's almost set to pass. Because once that passed, things change. Now you're running through a different legal section in that, right? So they're trying to get it now instead of waiting. So,
yeah, it's make as much money as they can before the laws change. Leads. I think my neighbor's working for cash. They're going to get audited. Secondary files. So you're working with that neighbor. And everything you're doing could be legitimate. You get receipts, but because they're working for cash, they're getting audited. Now you're getting audited. The government follows the money. So contractors are a big thing right now. A lot of them do work for cash. Not all of them, but there's some things or some components that are being done, and the government knows this. So if you've got a contractor coming in and doing some small renovations for you, make sure you're covering your own butt. Make sure you're getting a receipt, paying the HST, do everything properly as you should. And then if they get audited and they're coming after you because of something maybe they're not doing correctly, it stops. So that the government has nothing to find with you. Okay? If you're not tracking your records and doing that properly, then you can get in from a quick, well, we need to see this, to a full-blown field audit. And those are painful. Yeah. And we'll get into those in a minute.
How do they find out if you pay cash back to that person? Or if you, for example, give a check, or if you email money to a contractor, this is how they find.
yeah, if you're using check or email, well, there's a trail right there. So the way they're finding the cash people is they're doing net worth audits on them. How are you living the way you're living and you're only reporting $20,000 a year?
Yeah.
Right? So then now they're looking through all their bank accounts, through everything coming in. So then anyone associated with them is now just following down the line. So
if you buy $100,000 Mercedes and you make $20,000 a year, they're gonna wanna know where that money came from. So they'll be tracking stuff like that. So some of the main triggers, not filing on time. Now this is a nice catch, because, you know, you guys specifically sometimes take years. A lot of people we've met with that are just coming on board, it's because they're years behind in taxes and filing. So this is something that triggers the audit. So you do want to file on time. Again, that June 15th date, but if you owe anything, try to file before April 30th, or at least have money in the account so that you don't get nabbed on the interest.
this also goes for your HST filing and if you have payroll. That's what they're looking for as well, if you have any employees that work for you.
And the one suggestion, don't ever mess with HST. Pay that before eating. Because they are nasty. Income tax, they'll be a little bit more lenient. HST, that's their money and they're gonna want it. They can shut down your bank accounts and clear them out. They can put liens on your assets and they do it quite quickly. So make sure at least your HST accounts filed and up to date, okay? Filing return with errors. So typically you're gonna hire an accountant to do your tax return and you really have to hope that they know what they're doing. But if there are any errors, that can trigger the audit. So legally, when you sign off on that form, you're guaranteeing that everything they did was correct. So that's why the CRA will come after you. But any errors, they might even track them a couple of years. If it's a small error, they might let it go for a couple of years and then get into an audit. And then now they've got the fines and penalties and the interest, right? Where they make more money off of that than the actual income tax you owed. So you want to try to make sure there's no errors. And that's one of the big things with us is we guarantee no errors. Not providing information when requested. So if you ever get one of those brown envelopes that says you've been reassessed or we're looking for, you know, your top 10 gas receipts or, you know, you've claimed this and we just need documental support. Don't put that aside and get to it later. Deal with it right away. Typically, you've got a 30-day window to answer that, and it took a week or so to get off the person's desk and then getting mailed to you. So you may only have a week or two left to answer this. If you don't, it can initiate a more detailed audit. So you want to get at this. This could be a real simple, easy thing. Get at it right away so it doesn't translate into something bigger and they're looking more deeper into your books. So claiming a consistent loss. So if you're constantly claiming everything and you know you're losing money at the end of the year, typically not so much with you guys, but there are a few. If you're consistently taking a loss every year, you better have a good story for it, a reason, because there's only so long you can live off of savings, and that's what they're going to be looking at you. Well, if you're taking a $20,000 loss every year, how are you living? How big is your savings account? Where's this money coming from? So they'll want to know. And now, if you've just signed on with a new builder and you're putting in all kinds of promotional or marketing materials going on and you've taken a loss for a couple of years because you know it's going to pay off because you've got 300 units or something you're specifically selling, well, that's a story you can tell, right? But if you're just taking a loss because you don't want to pay taxes, they're going to track that, okay? Now this goes into your deductions.
So this would be, say you're grossing $100,000 for the year and you're claiming $30,000 to $40,000 in meals and entertainment in a year. So it's a ratio type thing as well. It's looking at, is that actually provable? Is that actually meals you're going with clients, or is this your own meals that you're going out for? Different things like that. So you have to view making sure that you don't have high expenses on one area where it's not compensating here. Like, okay, you made 50,000 this year and you gave it 20,000 in gifts. That doesn't equate, right? Like you're basically giving away your profit then in the long run. So that's what they'd be questioning on that.
Again, it comes down to the story.
Mhm.
Because again, if you're putting a lot into marketing and promotional, because you're building a business, you're new in the industry, or you just signed that big contract, then yeah, your expenses will be a higher percentage of your revenue. But again, you can argue that fact. Just having high expenses isn't gonna go over well. Okay? And this you have no control over, really,
Yeah.
but it's still gonna initiate an audit. The industry is the industry. Sometimes you've got a buying year, sometimes you not so much. So your revenue, your income can go like this year to year. It's not that 100,000 every year from a salaried person. You know, it can be 300 one year, 200 the next, 500 the next. Just that will kick off or initiate an audit. So again, if you've tracking your books properly, everything's covered, your butt's covered, then there's no issues. It's the industry you're in. But it's opening the door. So if you're not tracking your expenses, if you're not keeping your books properly, that door's been opened and now it's like a barn door. Any questions? We're here to help as much as possible, so if there's any questions.
Please, can you repeat again the gift cards and the, prepaid cards? Which one of them you can claim 100%? The other?
Prepaid would be like, say, Visa, MasterCard. Those would be 100% because it gives the client the option to do what they will with them, right? Whereas getting a specific card to the keg, Tim Hortons, government, if looking through everything, can say, nope, that's a meal, 50%. Or if it,
Home Depot
100% for Home Depot or Rona, that type of thing, because they're going to be doing maybe a renovation with their new house type of thing. So
Now you still have to write the person's name on the back of the receipt. Same thing you would do for meals and entertainment. You take somebody out for lunch. You do have to write their name on the receipt. And you're supposed to write what was talked about and who was there. So write the minimums. If you're giving out a gift receipt, put their name on it. Very rarely has the government ever tracked that, but they can. That's the point. You want to make sure that you're covering every aspect that you can, because they have the ability. It's in tax law. They can if they want. It's the same thing with the mileage. You know, you'd be going years and years, and you can even go through an audit, and there's no problems.
But then they can decide to use it, and they can take out everything from your vehicles.
So they can get as nasty as they want to, because it is part of tax law. And if you're not doing it right, they have the option to let it go, or they can nail you on it. So you want to make sure with the stuff that we're talking about, do the best you can to have that covered, or deal with a company like ours that actually teaches you, trains you, and makes sure that what you're doing and how you're doing it is accurate. So that if the CRA knocks on your door, you do have your butt covered. Okay? So if there's anybody that wants to know more about how we do things and why we are the real estate professionals for taxes, you can have one of us come out. It's a no obligation. We sit down with you, we review what you're currently doing, and then we'll tell you exactly how we'd be able to help and what we would cost to do that. Then book in an appointment. That's why Glenn's here. He's our coordinator. So if you want to give him a call directly, you can reach him at his 1-800 number. So it's 1-844-600-6789. Okay? So it's 1-844-600-6789. And he'll be able to book in our schedules. It would be one of us that actually comes out and talks to you and goes through exactly how we can help and what we would do to help you to get you started. Okay? Yeah.
Sorry, for me, I just enter into this industry, and I paid a lot of like course fees, examinations, and I have no income right now.
Yeah.
So can I just carry forward those expenses that, those costs?
Those are current expenses, so they actually have to be utilized in the year you do them, but they don't look at yours badly this year because of you putting all the money in to do what you're doing. It's more so the one we're talking about year after year expenses is when it's 5 years down the road and you're still showing that loss. When you're first starting out, they expect that big loss at the beginning.
So that's that story. You can take a loss
Mhm.
on your revenue because you're not selling yet, or
You're
you know,
getting to
you're,
the point.
you're still putting your face out there. You're getting your marketing and your promotional up and going. So they know that you're going to spend money before making money. You don't just walk into this industry and make $1 million. You got to build. They understand that. So it's part of that story. So just starting out, you can deduct that, take a loss on the year, but they are current.
Okay, so if I have some other income,
It goes against it.
so offsetting,
That's right. So if you end up with, say, a $20,000 loss from startup this year, but you add income of another 40,000 elsewhere, it'll drop that income down to 20,000.
The program that you guys offer, is that a system we can use too, or is that something you guys offer? Like we would give you bank statements, everything, and you guys have your own program, or?
Both.
Oh, okay.
So when we come out, we initiate, like we set you up on software so you can track your own books. We do prefer that you're doing your own bookkeeping because you understand where your business is then. If you're not in connection with any of your expenses, that's where you get in a position where you can make $1 million, but you're spending $1 million. Whereas if you're actually analyzing and putting the numbers in, you're understanding, well, yeah, I made $1 million, but I'm only spending 400. So there's money there. Now what do I do with that 600? I can start investing. I can do this. I can do that. If you've got somebody else doing them, then it's harder to do to track
Do you
that.
rent a system then? Or does people pay a monthly rental or?
For the software, no, it's free
With us,
our
no,
members.
with our members, it's a free software.
Yeah.
And like what I recommend, like especially for say yourself, first year starting out, I agree with Richard right away. First little bit, always do your own books, right? Later on, when you get busy and you know all the ins and out, hey, I don't have time for this anymore.
Yeah.
Then
Once you've got your
that's what
P&Ls
I
in
have
grasp.
members that I do their stuff now after they've actually done it for the last few years. They're like, hey, no, I know the ins and outs, but I don't have time for that anymore.
Yeah, just too
I
busy.
do it now.
That's fine. And that's why I said both.
Mhm.
Starting out,
Mhm.
understanding, getting reorganized, we
Mhm.
suggest you do it so you
Yeah.
actually understand what you're doing in your business.
Mhm.
It gets you more organized. It also makes you more money that way if you're more organized. But when you are too busy, we can step in and do it for you. So we grow as a business, we grow with you. And we can do your payroll, we can do your books, we can do all kinds of other things as well. But the initial training, the initial reorganizing you, because even those that have been in the industry for years, chances are you're doing it wrong. Can be, not saying everybody, it's not a broad stroke. But you want to make sure that you're tracking your books properly. Tax law changes way too often. So it's over 3,000 pages and it changes about every 6 months. So the reason we're able to stay on top of that is we've got proprietary software. So we've got people in Alberta that analyze, well, what does the government change? Translate that to English. If any of you have actually taken law, that's not English. And then they upload it to our software. So between the software and the training, we're able to capture every dollar for you.
Yeah, because us as road reps, we do upgrades each year. We have new training on new stuff going on. So
So you guys do file the returns then?
Yep.
Yes.
If the people.
Yep.
That's how you make your money at the end, if you're giving the software free.
Yeah.
And then
It-
the.
Well, we
returns
work
are filed
with a
by you
company.
guys.
So
Yeah.
the software we provide is not ours.
yeah, we were.
It's a software you can buy. It's called Cashew.
With a K.
Kashoo. So it's not spelled like the nut, although that would be really cool collecting all your nuts.
Yeah.
But it's Kashoo. They're a separate company. They've got no affiliation with us other than we've partnered with them, and they give all of our members this software for free. You can get it yourself. I think it's $30 a month or something. It's an online software.
Yep.
But what it is, it's a layman's software.
Is it like QuickBooks or something like that?
Simpler. So QuickBooks and Simply Accounting, Sage, stuff like that, those are meant for accountants. They're very complicated. If they're not set up properly, they'll actually cost you money. With cashew, it's very simple. It's meant for non-accountants, but it gives us all the numbers we need. We set it up, we organize it the way it needs to be done.
And we can overlook it and add everything as well. Go
So you
back
guys
to
are chartered accountants.
CTC, Certified Tax Consultants. Chartered accountants are in our quality and corp department. We have those in there. You do, for a chartered accountant, they'll go through all their classing and they'll do one class of taxation. So they're not keeping up to date on all that.
So all those changes, like I went to school for accounting as well, and I got one course on taxation, and it was how do you move numbers from Sage and QuickBooks into a tax software. There wasn't a lot of training on actual tax law. So through this company, it's ongoing training to make sure, it's, think about the medical world. You look at your general practitioner, your GP, very highly trained. Would you want them to cut into you? You go to a surgeon for that, right? Somebody that's trained specifically in doing that. Well, with this company, trained specifically on working with taxes. Now, a surgeon can be a GP. GP can't be a surgeon. That make sense?
So how much you charge for the membership fee?
So that we go over is all individual. So we're not
Everyone
gonna
has
get
different
personal.
stuff,
Yeah.
different things going on, so.
So that's why we come out, we sit, we explain exactly what we do, how we do it, and what we charge specifically you based on your situation. So we do have to come in and sit down with you to do that. But in relative fashion, we're not that expensive. Any other questions?
I just arrived, sorry, I had to do a showing. I would have liked to be here for what you had to say. Do you have a handout or something? Was there a handout?
Yeah.
Okay. I have one burning question that was put to me yesterday. I don't sell farms. And somebody asked me the question, is full HST payable on buying a farm?
That's when you have to find out, are both people HST registered?
So there's multiple answers to that question.
Okay, they have two other, it's a gentleman investor farmer.
Yeah,
He has two other farms.
okay.
Yeah.
So as long as the person buying it has an HST number and the person selling it has an HST number, it gets nullified. So you don't have to pay it out, one doesn't have to pay it, one doesn't receive it, you don't have to claim it. But if it turns out that the buyer does not have an HST number, the seller has to collect HST and remit it to the government.
Okay.
So it's a very, very simple conversation. Go get an HST number if you're buying a farm.
Right.
Or else you have to pay it out.
Well, yeah, the lawyer is telling the accountant that he's gonna be subject to buying this property. It's about $1 million, $1.1 million or something.
Yeah.
He's gonna be subject to full 13%.
If he doesn't have an HST number.
Yeah.
That's the key.
That's the key, because then the way the government does it is they wipe it out on the fact that, well, we're not gonna let one claim the ITCs and then one have to pay it out because it's just matching them, right? So they allow you to wipe it out on the tax return for the HST, return.
Yeah, and just something that somebody else that I know sold farms, they weren't 100% on it as well, because they're selling to developers. Well, the developer has an offsetting as well,
Yep.
as they're buying properties for inventory.
Yep.
Yep.
So that it's kind of a different situation.
Mhm.
And yeah, so I'm a paralegal. I do assessment and property tax litigation. So I've been involved in lots of farm issues, and I know all the rules and regs to be taxed at farm class.
Yeah.
But, that's one question I didn't know about HST.
Yeah, and there's actually, it's funny, it's a very simple situation, but even a lot of the lawyers don't know the answer to that.
Well, that's
So
the
make
thing.
sure you're
The
getting
lawyer,
advice.
the lawyer's telling the accountant, and
Mhm.
you know, it sounds like the lawyer doesn't know or
Yeah.
didn't
Yeah,
relay the question of whether or not it was an HST for the buyer.
because it also comes into classification, what's the property classified as? Is it residential as a farm or is it farm? So there's more that needs to be looked into, but rule of thumb, make sure the buyer has an HST number as well.
Yeah.
In the end, it comes down to is also, it would only be the farmland portion of the sale that would be HST applicable. If his house is on there, there's no HST on your residential.
No,
So,
obviously, yeah.
So that's other things they have to make sure they separate if the
As far,
buyer
as
does
far as
have.
impact goes,
Mhm.
you're assessed on your home and 1 acre surrounding
Yeah.
your home
Yep.
as being at residential, and
Yep.
the remainder is at farm.
HST question as well.
Yep.
In the case of a builder, where a builder buys an old house,
Mhm.
mostly knocks it down, doesn't, keeps the basement or whatever. But
Mhm.
let's say he pays 800,000 for the old house, he
Mhm.
renovates it, to, like new.
Yep.
Then as far as the HST, goes there, well, actually, no, let's do a different equation. If he buys a property to build,
Yep.
brand new.
Yep.
There's an old house on it, there's expenses there, getting rid of it, what
Yep.
have you. So he builds the new house,
Mhm.
that 800,000 that he spent,
Mhm.
for the initial house that he bought as a lot.
Yeah.
For the lot. As far as the HST goes, does he have to, is he able to collect anything on his expenses, ITCs on his expenses?
Well,
on the
because
old
he's
house,
from
for
the old,
800,000 that he spent,
the 800,000 from originally buying the old house.
the old house that he's had to knock down, now he's selling.
If he bought an old house, though, there shouldn't be any HST on it when sold.
No, he didn't,
Yeah, okay.
he didn't, but the problem is with
Mhm.
these little situations is
Mhm.
that you pay 800,000
Mhm.
really for your lot,
Yeah.
and you have to remove an old house.
Yeah.
Then you sell your house for 2 million.
Yeah.
You're paying the HST on 2 million. This lot business
Yeah, like when he's building